Imagine buying a share of Apple not on the New York Stock Exchange, but on the blockchain. Tradable 24/7. Divisible into tiny fractions. Accessible from anywhere in the world, even without a traditional brokerage account. Sounds like the future? It's already happening. Stock tokenization is one of the most disruptive financial innovations right now. It's the process of creating a digital representation of a real stock, let's say Tesla or Microsoft, and putting that digital version on a blockchain. That token is backed 1-1 by the actual share held by a licensed custodian. And that means when you own the token, you own the underlying share, or at least all its rights like price performance, dividends, and even voting in some cases. So why is this revolutionary? Because the traditional stock market is slow, closed on weekends, and locked behind a wall of brokers, regulations, and borders. With tokenized stocks, anyone with an internet connection can get exposure to companies like Apple or Amazon. You could live in Argentina, Nigeria, or the Philippines, and still invest in US equities using a stablecoin wallet. No waiting for trading hours. No middlemen. No minimums. Tokenization also allows for fractional ownership. Instead of needing hundreds of dollars to buy a full share of Google, you could buy $5 worth of a tokenized Google stock. And that opens up investing to a whole new global demographic that was previously locked out. Now let's talk about security. Some critics argue tokenized stocks are too risky. But in most systems, the real shares are held by a regulated custodian. The token is just a mirror. If done right, it combines the best of both worlds, blockchain efficiency with traditional financial security. And because everything is on-chain, transactions are transparent, auditable, and instant. Major financial institutions are already exploring this space. BlackRock, for example, is tokenizing money market funds. JP Morgan has built its own private blockchain to test tokenized collateral settlement. In 2023, Siemens even issued a digital bond on a public blockchain. This is not some crypto startup dream. This is mainstream finance preparing for Web3. But it doesn't stop with stocks. Imagine tokenized real estate, tokenized treasuries, tokenized commodities, all composable, tradable, and programmable. You could build an entire DeFi ecosystem with real-world assets as collateral. Borrow against your Tesla shares. Swap fractional real estate for ETH. Stake a basket of blue-chip stocks to earn yield. The possibilities are endless. Of course, the big elephant in the room is regulation. In most jurisdictions, tokenized stocks are still in a gray area. The SEC hasn't fully clarified how they'll be treated. Exchanges are hesitant. But the technology is outpacing the regulators, and sooner or later, the law will catch up. And when it does, the shift might be as big as the internet itself. Now, let's talk about who actually wins when stock tokenization goes mainstream. First, the obvious players, blockchain infrastructure providers. Layer 1 networks like Ethereum, Solana, or Avalanche will likely host the bulk of tokenized assets. More usage means higher transaction volume, more gas fees, and more demand for the token. If tokenized assets take off, the chains they run on will scale with them. Next up, custodians and compliance platforms. Think of companies like Fireblocks, Anchorage, or Coinbase Custody. They're already managing billions in crypto assets, and if they pivot into regulated tokenized equities, they'll sit at the center of the new system. Now consider financial infrastructure stocks. Companies like Broadridge, NASDAQ, or even banks like BNY Mellon could benefit by offering tokenization services or custody. On the crypto side, DeFi protocols that enable synthetic stocks, collateralized lending, or on-chain derivatives could explode. Platforms like Synthetics, Pendle, or Ribbon might become the new Wall Street. And finally, keep an eye on wallet providers and aggregators. Whoever controls the user interface to tokenized assets controls the flow of money. That's a powerful position. So what does this mean for you? It means the way we invest is about to change. Stocks will become borderless. Financial inclusion will improve. and markets will become faster, fairer, and more transparent. But the real winners will be those who understand what's coming and act early. If you're ready to explore that future, make sure to hit the like button, subscribe, and turn on the bell. And if you want to start investing in crypto or tokenized assets today, check out the links below for Coinbase, BitGet, and Scalable Capital. You'll get bonuses, and it supports the channel. The next generation of finance is already here. Don't get left behind.